creating more opportunities for a green economy and greening the UK economy faster is going to be a key part of their manifesto. We're quite keen on robotics right now. There's always been this labor constraint, which we've been looking at solving. We've made a few investments in upskilling and such for the green economy. I think it goes a long way in creating a level playing field by setting the same rules across the block. So I think that's what's been really helpful here.
Welcome back to Clean Techies, the #1 podcast for climate tech entrepreneurs. I'm Somil.
And I'm Silas. Each week, we publish the secrets to success from investors, founders, operators, and experts in climate tech around the world. Building a startup is hard. Building a climate tech startup is even harder. But we make it a little bit easier.
We put a lot of effort into these shows, so we hope you enjoy. Don't forget to subscribe, leave us a review, and let us know who you think we should have on next.
With that, let's get into today's episode. Hey everyone, quick note for you. You're currently listening to the free preview of this episode. If you'd like the full thing, the full shebang, go over to our Substack. That's cleantechies.substack.com/subscribe and become a paid subscriber. Any paid subscription gets you full access to the show on the Clean Techies Substack.
Arjun Jairaj is an investor at Noah, a London-based VC firm focused on early-stage ventures in the built environment across North America and Europe. With his experience in private equity, startup founding, and advisory roles, Arjun has worked in India, the UK, and just knows so much about the startup ecosystem. At Noah, he focuses on real estate, construction, energy, and mobility, and he has a strong emphasis on how that impacts the climate. So in this episode, what's most exciting is we get to talk to him about what it's been like being in the UK on the ground now that the Labour Party has come into power with this new momentum around climate tech. We also talk about the differences regionally between investments, especially for the built environment, the impacts of political landscapes, the UK, but also the US on climate tech, and emerging opportunities in robotics and decentralized energy systems. Overall, this was a fantastic episode that has some really groundbreaking stuff, so listen all the way through to enjoy. Also, if you haven't yet, go to Substack and cleantechies.substack.com and upgrade to paid to hear the full episode. All right, enjoy. All right, Arjun, welcome to the show. How are you?
Good. Thanks for having me, Soma. Excited to be here.
I'm pumped to have you on. I was just telling you that a very similar style of episode that we did a couple months ago was like our best performing over the past couple of months. So I think people have been waiting for this.
All right. I hope not to let anyone down. So let's see.
We'll start off with the funny question, but we'd love to kick off our episodes this way. If you could have dinner with any clean techie or climate tech OG, who would it be and why?
That's a good one. I have to say Saul Griffith. We met him once. I spoke to him once when we were looking at Span, a company we ended up investing in because he's been an advisor to the business. But he just seems like such a great guy. I ended up reading his book shortly after, Electrify. He's so passionate, and he seems like a great guy to grab a drink and have a dinner with. So yeah.
That's sick. I think we've heard a lot of people who are a little bit older or no longer around, but you named someone that we could have on the podcast. So I think this is going to be a future target now.
Nice.
So taking a step back a little bit, I know who you are, but the audience doesn't. Please tell us, super quickly, who are you and what do you do?
Oh, sure. So I am an investor in Noah, a VC firm based here in London, but investing across North America and Europe in built world technologies, or rather the intersection of where the built world, and that encompasses everything around real estate, construction, energy, mobility, and as it relates to climate and other ESG themes as well. Before starting at Noah, I've had a bit of a varied career. I spent most of my professional career in India early on, starting with M&A advisory, and then pretty quickly realized that there was a lot of interesting things happening back home in India, just an amazing and young startup scene. And so I moved over first as a founder in a business called Plonk, which was trying to create a shared economy for parking spaces. It didn't work out as I would have wanted it to, but it was a great learning experience. And then realized that I wanted to be on this side of supporting startups in some way. And so I joined a firm that was investing and helping sort of co-create startups. So it was an investment and hands-on operating role, mainly in consumer businesses. Did that for a few years and then moved to the UK to pursue an MBA. And shortly after, I got started at Noah. and we were known as AO at the time.
Great. One of the things I'd love to start off by asking is how did you find yourself caring about the climate? Did you have a first memory where this was relevant to you?
Yeah, I don't know if there was a single moment, but obviously I grew up in India, and it being a much poorer country than the one I live in now. I think I was always sort of conscious about the impact that climate had on the lives of most of my countrymen. I think I grew up with a relatively sheltered and well-off upbringing, but when I saw all around me, it's still a country where the majority of people still rely on subsistence agriculture and rely on rain-fed agriculture. So, the impact of a failed monsoon is disastrous for people. So that was always something that I was conscious about. But I do remember once, I think it was when I was 12 or 13, on a family holiday to Alaska. That was the first time I saw sort of like the raw, rugged beauty of this unspoiled nature that I'd never seen before. And at that time I was studying at school about climate change and stuff. This was and it was special for me to see that there were still parts of the world like that and worth preserving and protecting.
That's such a great story. I myself come from upstate New York, and I think you get to see, compared to growing up in a city, when you're in and around nature from a more extended period of time, you really start to understand, okay, we have an impact on this. We didn't just grow up in, concrete jungles
Yeah,
all of our life.
it is missed, yeah.
So let's talk about NOAA for a little bit. So NOAA,
Sure.
formerly called ANO, what is NOAA Ventures, and how did that come to be?
Yeah, sure. So NOAA, and as we were known as AO, was founded in 2019 by Greg, our GP and CIO. Essentially, we launched a fund with the focus with the emphasis of investing in primarily at the time prop tech businesses, helping them navigate a lot of the changes that were impacting the industry. So struggling with digital transformation, but also growing number of challenges around increasing the sustainability of assets and those ratings. So when we started, we quickly realized that there was a broader opportunity ahead in front of us. It wasn't just real estate, but the built environment, which encompasses, when we think about infrastructure and construction, has a huge role to play, not just existing infrastructure, but how we design and build new infrastructure will be key in determining how quickly and the path that we can take to getting to net zero, but also building more sustainable and healthier spaces for people to live in, creating equitable and accessible urban environments. So we see it as a core pillar of a lot of the changes that we want to see, positive changes. And when we look at the stats, I think we often say this, but the built environment accounts for about 40% of greenhouse gas emissions, and some of them are very difficult to decarbonize sectors. So there's a lot of opportunity and impact to be had with the built environment. So that was the fundamental thesis that we were built on. And today we're now in our second fund. We recently rebranded to NOAA to signal that and NOAA is a word from in Hebrew that denotes movement and change. So movement and motion, sorry. And so I think it just reflects that we've grown and this is a more encompassing vision than we initially started with. But yes, we back early stage ventures in the built environment across predominantly seed to Series B and in North America and Europe for the most part.
Right. And so if we think about how you invest in the built environment, you have a specific process that you follow, as all venture funds do. So I'd love to hear about that a little bit. How does your investing process work?
Sure, yeah. I think, there's a bunch of things to unpack there. We take a thesis-driven approach where we really try to break down the different layers of the market and see where the opportunity is. We always believe in investing where there's a must-have or a real ROI, and so just assessing the value creation of an opportunity and building a deep sector view. But at the same time, we also have an in-house data science team that helps us with this thesis building. So helps us create more granular market maps, identifies where there's been clusters of opportunity that have been backed, others that may not, may be lagging in some ways. And then we also create, universes of companies and potential founders that we screen and are able to reach out to. Alongside this, we have, as many funds do, an expert network that we tap into because we can't be experts in everything that we look at. We're relatively small team. And so we sort of vet or test some of underlying thinking and, ask them to challenge us. And then every deal that we look at is, subject to a pretty detailed DD process, which, will include founder calls, reference calls, reviewing data rooms. Yeah, I think, but the level of detail and due diligence that we do will also depend on maybe the complexity of the sector, existing understanding of it, but also the stage. If it's an earlier stage investment, it's maybe a bet on team vision and the market. But if we're looking at a Series A or Series B, I think we're more conscious that there's metrics with business, and so we're a little bit more, I don't know, formulaic about it. I don't know what the right word there is, but
yeah. You know that feeling when you meet someone who shares your vision for the future? It just clicks, like two peas in a pod. Well, that's exactly how we felt when we met Goodwin, who we are proud to have as our sponsor. Being the first major law firm to set up a climate-specific startup and venture practice makes them exactly the kind of partner we are excited to work with. They realize that there are a plethora of challenges to building climate tech startups, and that's why they have built an entire suite of resources for founders, investors, and entrepreneurs in the space. They even offer several tailored pricing methods. And guess what? It doesn't matter where you are listening to this. Goodwin is a global law firm that you can trust to be your partner through it all. From incorporation to exit, they've got you covered. Go to goodwinlaw.com and tell them Clean Techie sent you to get exclusive access to startup resources. All right, back to the show.
So getting into some of the specifics, when you think about structuring your advisors and these external experts around the built environment, taking a step back, especially for an audience listener, a clean techie who doesn't fully understand the kind of expertise you might need when investing in the built environment, what kind of advisors do you need?
Yeah, that's a great question. I think when we first started off, right, when it was real estate and construction, I think broadly between LPs and some of us on the team, we were fairly well placed, given a lot of us had backgrounds in these industries. But now that we look at things like the energy transition, which is again quite a broad term, even within that we have the electrification, we've got things like the hydrogen economy, and so we started to enter these very nuanced and technical fields, each of which have their own stakeholders, different universes and considerations. And so we often think that in the sectors that we're actively tracking or looking at for investment opportunities, we like to get in either experts who have that deep technical knowledge, or call it years or decades of operating experience, who can help us bridge the knowledge gap that we will always have in terms of maybe asking the questions that we might miss. So in terms of how we identify these experts, I think there's some who we come across in by way of industry networks, through our founder networks as well, and people who we reach out to. But I think that's how we do it.
That makes a lot of sense. I think it is always interesting to hear, especially for the built environment. It's such an ecosystem specific thing where you have to think a lot about, what are the different buyers in this space? What are the market forces? And also, how does that tie in with regulation? And I think we're going to get into that. It's a perfect segue into the first sort of thing I'd love to grill you on. We'll see if I'm successful. But talking about a little bit about the political landscape, right? I think where you are is a very unique point in time, because there's concerns about what the climate tailwinds are in the United States, for example, with a potential new administration change. However, you contrast that across the pond with the Labour Party in the UK, and they've come out to be what is seemingly very pro-climate. So I want to ask you, from someone who's on the ground there, why does it appear that way, and what is actually happening?
The Labour Party's win in the UK is, as you said, a bit of a standout moment. I think this year was on record was a pretty big year for elections around the world. I think somewhere around 50% of the world went to polls, either national or in the case of the EU, there were EU elections as well. And I think you're right. We've seen a gravitation towards the right in most cases, but in the UK we've gone a bit to the left with the Labour landslide. Look, I think the Labour Party has made it clear in its manifesto that creating more opportunities for a green economy and greening the UK economy faster is going to be a key part of their manifesto. And normally we see that when parties enter governance, there's often the whole thing around compromise and how do these policies actually take shape. And it has only been a few months, but we've already seen, I think it was just today that they announced that, so they had a plan to create a new government-funded organization called, I think, UK Green Energy PLC. So yeah, there's a lot of good things happening. And I think in Europe, by and large, there's still a lot less sort of political debate around climate change. There are nuances around it, but I think with the right in Europe and any kind of reactionary thing against some of these green initiatives, it's been more mixed with certain other issues with the economy, migration, funding the war in Ukraine, for example. There are a lot of other issues that are conflated with it. But I think on the whole, we still see, even with the EU moving maybe a little bit to the right, there's still strong tailwinds for things like solar energy. The EU has a new solar rooftop mandate, which in the next few years will cover the majority of both public and private buildings. So there's a lot of impetus still for climate tech here in Europe.
Climate tech founders are taking on a huge challenge. Not only do they need to know how to build a startup, but they also need to deal with hardware, have a strong handle on climate policy, know how to fundraise from diverse investor types. It's a lot.
That's why we make Clean Techies, the #1 podcast for climate tech entrepreneurs. In addition to our jobs, we devote 20 hours a week to producing this podcast for you. This way you can learn from the people who have walked the path before you, learn from their mistakes, and gain insights on navigating this complex journey. If this mission resonates with you, we are asking for your help. It takes a lot of effort and it's not free.
If you are already a subscriber and want to help, start supporting us today by going to Substack and clicking Upgrade to Paid. Thanks for helping all the climate tech entrepreneurs like you.
Yeah, and you were talking a little bit about the extent to which, you're seeing some recent updates in the UK and the magnitude of those. It's getting to be pretty big. As a VC, for you, has it gotten to the point where you're thinking about bringing in, talent or experts among those advisors specifically on this? Or is it, maybe it's the level of like having initial conversations about, wait a minute, are there, do we need to change our investing thesis around some of this? Like, to what extent is it affecting you?
Yeah, I would say that over the last couple of years, it's been a policy shambles in some ways with the previous government, and that made us hesitant to invest. Not that, the UK has always had a great pool of talent, a lot of great entrepreneurs and ideas here, but I'll take heat pumps as an example. I think even as late as last year, there were about 3,000 trained technicians. The government had these lofty heat pump targets and even had a generous grant of, I think, up to £10,000 in rebate for a boiler upgrade scheme. But there was no uptake because there was no communication. The policy wasn't communicated and structured and really pushed well. It was vaguely defined, and I think it was just there was no coherent plan in place. So what we're seeing now is all of the things that we liked about these business models in other countries are now becoming possible in the UK, and so we're looking more at those opportunities now. Rather than looking at entirely new opportunities, I think the stuff that was successful in Germany a couple of years ago, I think is becoming much more plausible here now with the new government. So I think that's just how we think about it.
And you were saying that things earlier felt vague, or it felt harder maybe to latch on to some of these things. What have been some of the tangible changes that just make it easier to stick to, I guess?
So again, I'll caveat that it's been only a few months. So I think the most sweeping change so far is that it's a fresh narrative. So we're coming off the back of almost 20 years of Conservative Party rules. So it almost seems like clean slate. So everyone's looking at it from a fresh lens, and there's expectation and hope. I think that really helps as well, and there's a hope that policy will follow. So we haven't seen much in the way of tangible, policy yet. I think it's still a bit too early for that.
I want to now flip this to the other side of the equation, which is not just on the startup point of view, but as a VC, you interact with LPs, right? And you interact with what is probably, people who represent the broader macro trends of the industry. How are they if at all, being receptive or changing with this recent shift in the political landscape in the UK? Is this something that has trickled down to you yet, or is it, are you somewhat kind of like stuck
Yeah,
within your original LP mandate?
yeah, I don't think it's been a big consideration for our LPs because, they've already been in the mix, and so it hasn't really come up yet. Also, our LPs are not UK specific in their outlook. I think they look more broadly at Europe as a whole if they are European. And so from that perspective, it hasn't changed too much. So, yeah.
And now, thinking about not just, you actually made the perfect transition. So thinking not just about the UK geography, one thing that I have had a lot of opportunity to look at while investing in the built environment is how different technologies scale regionally, right?
Mm,
And some of the things that you start to learn about how people think about investing in North America versus
yeah,
investing in the UK or Europe. And there are some big differences there in terms of how people
absolutely.
talk about it. So I want to set the scene by asking you, how do you view the differences between investing in North America versus Europe regarding the built environment?
That's a great question. I think again, just peeling back the layers there, fundamentally, like the built environment in both these geographies is pretty different. When we think about the US, and of course I'm painting in broad brushstrokes here, but the US, much newer built stock, there's a lot more urban sprawl, for example. You have these larger single family homes. You look at Europe, the cities are, likely to be much older, much higher population density here, so less sprawl. And there's fundamentally, when you think about things like heat pump adoption, for example, there's different types of, whether there's just a different sort of, when you think about large heat pump replacements for single family homes, it's a lot harder to do in a place like England where you have houses built wall to wall and you have regulations against, we have noise regulations, for example. And so there's a lot that needs to change there. So I think we're conscious that the two markets exhibit pretty different characteristics. There's also, when we look at different business models, one of the things that's more true of the US, I suppose, is capital markets are a bit more sophisticated. So when you're thinking about businesses that rely more on asset financing and such, will probably be easier there in the earlier stages. And then, again, in Europe, we also have to contend with the fact that there are regional variations, markets to markets, they differ. So with EU harmonization, you have the opportunity to create sort of regional champions now. But I think a few years ago, you were still looking at opportunities that were largely geo-fenced within certain markets and would scale maybe within the immediate, France, Belgium, Germany, and the dark areas, but fewer, opportunities to go across the whole of Europe. But I think that's quickly changing. So
What do you think is causing the change of that? Is it, just the nature of things? Is it technology becoming more widely adopted? Like, what is causing some of that potential?
yeah, again, a great question. And I think with some of the things like that we look at, let's say some of the energy facing thing, grid technology and stuff, I think what's helping is I should say that we never really look for regulatory capture with businesses. We don't want to invest in businesses that don't have sound market, rationale and that rely on regulation because regulation is subject, it can be binary, it can be subject to timing risks. And so we've seen horror stories and heard horror stories with the IRA and, the weight of expectation there. What we have seen though is that regulatory framework can change the dynamic and maybe be a bit of a catalyst in some ways. So that's what we see with a lot of the EU specific mandates when we think about the EPDs for products. All of a sudden, you have more of a need for life cycle assessments and environmental product declarations for all kinds of building materials. So what was a few years ago an opportunity that was maybe limited to markets like France, which had national laws around it. They're not EU specific, EU wide laws for it. So so I think it goes a long way in creating a level playing field by setting the same rules across the block. So I think that's what's been really helpful here.
Taking a step back and looking at, what you describe Europe as someone like a very fragmented market, right? Different countries, different systems. Now we're seeing some broader, standardizations across the ecosystem. I'm curious, when you made as a fund the decision to invest in Europe and North America, the rest of the world is obviously, they exist, right? And so I'm
Yeah.
curious if you've ever done the thought exercise of, should we enter an emerging market? And if you have anything to share about, how investors are thinking about that, especially regarding the built world.
Yeah, look, that's another great question because we often see tremendous opportunity in some of the other markets that are pretty close by. So we're a bit closer to the Middle East. We see a lot of activity there. South Asia, Latin America as well. We do see on occasion deal flow and some great companies coming out of there. I think there's been a lot of built world success stories from Latin America, for example, even until a few years ago. While we think that the opportunities are great and we think it's a bit different. So with the Middle East and South Asia, we're seeing a lot more new construction activity, and some of these markets have less of a legacy sort of bias. That more clean slate, looking at things from a fresh perspective, and that makes it also easy to push new technologies. When we think of things like robotics for construction, we hear from some of these and people in our stakeholder ecosystem that there's a lot more receptiveness for implementing things like that in the Middle East. Another area that we've always loved is things, the area of AI enhanced design tools for architecture, engineering, and construction, AEC. Again, you have markets where the regulation in some cases or specs and codes are being built around new technology rather than codes and specs that have been in place for decades and will now need to be changed. So I think we see a tremendous wave of opportunity there. It's just that we don't have boots on the ground in these markets or the local expertise and the nuances to invest in emerging markets. So it's something that we remain open to, but definitely not in this current fund cycle.
Yeah, and I think that makes a lot of sense. I mean, anytime I think people talk about a great opportunity in an emerging market and they, you hear them pass on early on, from my experience, a lot of it's, we don't understand that market or we wouldn't be the
Yeah.
right partners. I'm curious for you, and this is, even outside of more like what Noah does and more your own thesis as an investor. One thing I see happening as a result of this is that, especially in the built environment, you have cycles, right? You have certain
Mm.
technology that comes to bear where every VC seems like they're bullish on it at the same time, right? Heat pumps, geothermal. I think we're seeing a lot of heat
Mm.
technology, for example, in the limelight
Yeah.
right now. In theory, that's the opposite of being contrarian, right? If a
Yeah.
general venture practice is to be contrarian, because that's likely where you'd see outsized returns because no one else is doing
Yes.
it. I'm curious, with that sort of background, how do you think about being contrarian in the built environment?
Yeah. I'll maybe start with saying that, maybe this isn't limited to the built world because, we see, you want to call them hype cycles or whatever else you want to call them. But we've seen this happen time and time again, right? In the past few years, we've seen generalist VCs enter things like NFTs in the metaverse, or whether it was blockchain. Now it's Gen AI in particular. But in some cases, there's a real need for that because sometimes it signals when there's like a watershed moment in a certain technology or market adoption. And I think there's something to be said with Gen AI, and that, it makes sense. But you're right in terms of there's a herding effect, and oftentimes dollars are poured in to a specific thing, and so you would think that you should be making bets outside of the noise. I think we don't think in terms of being contrarian or following the crowd. I think for us it's always been, if our thesis is sound, we're making a long-term bet. Long-term being the fund's life cycle. And so we need to underwrite something that works out in, about 5, 10 years. And so we try not to let the noise affect us. So if we're confident that there's a real problem that's being solved, that there's a real ROI to be had, we'll invest. And I think when we look at what we're doing, we're actually looking at an opportunity now in the voluntary carbon market space. VCM has suffered from a lot of reputational concerns over the past few years. There's been bad publicity. There've been some genuine concerns about the validity of some of the things in the VCM, and we've seen a bunch of opportunities in the past where a lot of VC dollars went into, and we said no, not the right fit. But even though this might not be an obvious area for most VCs now, I think we're confident in our own ability to underwrite something that we're probably going to go and do this deal because we think it makes sense. And so that I think that's maybe how we look at things.
So on top of VCM, are there any other hype cycles you can remember that you kind of brushed up against or has been sort of testing you in that regard?
Oh yeah, in 2021, and so we saw a lot of solutions around things like computer vision for construction site progress monitoring. We saw a lot of companies in DAC, green cements, and other new building materials. I want to say that there's hype cycles, but there's also a lot of big bets been made in fundamentally deep tech plays or plays which are far from sort of commercialization, I'll say. And so we've always been conscious again about we don't think in terms of, deep tech or business model innovation as much as we think in terms of how what is the role of venture capital? Is it the right form of capital for the business? Is it given is a time horizon for the business to reach the kind of outcome that we want in line with where, when we're investing? And so we stayed away from a lot of bets that we thought were maybe too far out in the future or required way too much capital and had fewer proof points. So I think rather than thinking about hype cycles, I think we've been conscious of it. Like we're comfortable doing things our own way, no matter what it is.
And so this might be this is probably a very basic question, but I'd love to just hear how you think about it. So I'm a company, I'm building a product, and you're quantifying me based on a time horizon, right? How do you think about time horizons? Like, how do you calculate that? Thanks for listening so far. To get the full episode, go over to Substack and become a Clean Techies premium member by selecting any paid membership. Not only will you get access to hear the rest of this episode, but you'll get access to exclusive interviews, our monthly show, the best, most relevant insights from our shows, and access to our premium community.